Kia ora team, it's Claire here from My Mortgage, and we are just wanting to give you a little bit of feedback really on funding builds. So today I'm joined here by Greg. We have had a few technical difficulties, which means unfortunately we are struggling with our PowerPoint, but I will just keep talking, like the sound of my own voice and everything, about how all this works, and hopefully you still should find it really helpful. We are going to just run through basically the broad outlook on builds. There have been a couple of changes over the last sort of couple of months, and obviously just wanting to keep you up to date on those. So Claire here, My Mortgage director and shareholder. I just really quickly will cover off that this is not specific advice. So anything we say tonight is quite a general of a general nature. So you need to get some advice particular to your situation. So generally after this webinar, we will follow up, check in with you, make sure that you have got enough information to make decisions based on your situation. So just a little bit of a disclaimer there. So let's crack into it. So the first thing I will start to talk about initially is when we're talking about funding builds. Over the last 12 months, we have had a bit of a change in how banks fund them. So essentially, ANZ and ASB have brought out very comparable products. ANZ is called Blueprint to Build and ASB Back My Build, and both of those products are based on a funding line that the government put in place after COVID to stimulate housing construction. And essentially what that means is that you get a big discount on your rate. So it's a floating rate discount, and depending on the bank, it's between sort of 2.5%, 2.75%. So at the moment, we've got rates sitting between sort of 2 and 2.5%, depending on the bank. So it's pretty different to what our floating rate is, which is heading up towards that 5% mark, and also obviously our fixed rates, which are sitting at 4.5-ish for 2 years, heading up towards 5% for 3. So essentially, these products are aimed towards new builds. So they are not for renovations for anything like a large scale, let's say a $300,000 renovation. You're not creating a new dwelling, so the product's not available for that. But it is available for obviously for own homes, and also for ancillary dwellings, anything where you're adding a new dwelling to a property. So that's really positive. We've had a lot of investors pick up on that. And also obviously homeowners and things like townhouses and turnkeys and stuff like that, which I'll detail soon. What has happened in the last couple of weeks is ASB has actually changed their funding. So essentially what that means is that they've dropped off the new approvals heading from about the 8th of April. So what it kind of means to most borrowers is if we do have an approval with ASB and the build is happening within the next 12 months, then we're looking at meeting conditions prior to the middle or early July, basically. So having loans documented and documented and ready for progress payments by the start of July. So that kind of gives us 3 months to be meeting conditions on loan offers. So I will start to talk a little bit more about that, because for some of you that won't mean anything. So we'll take a step back and we'll start talking about different types of builds. So essentially there are 4-ish different types of builds. The first one is a turnkey. So an example of a turnkey at the moment practically is generally a townhouse. So for example, I'm doing a application at the moment for a couple who are buying a townhouse in Hamilton. They signed a contract in November last year. They paid a 10% deposit on $750,000, and so that's $75,000, and then the remainder of that money is due upon completion. So what it means essentially is you can turn the key and you can walk into that house and it's brand new and it's finished. The bank will fund that as a build, and also they do like them because the price never changes. So you're effectively paying that same price regardless of what happens with the build, and the developer would just absorb any price increases. In Auckland, we have seen some changes around that. So there have been some publicised increases in costs, but that really hasn't happened down here in the Waikato, which is awesome. So that's a turnkey. We used to have turnkey house and land packages, which are essentially the same thing, but they had like a section and a build as one. Those now have kind of merged into sort of what we call house and land packages, where because the cost of land has increased over time, the developer or the builder can't now afford to hold on to that land and provide you a full package with a 10% deposit and a price at the remainder of the money upon completion. So what that's now merged into is what we pretty much call a house and land package. So there's still a total price, but you settle on the land when the title's due, which we're doing a lot of those in the Waikato at the moment. And then you do progress payments on your build. So essentially, what is a progress payment? We'll talk a little bit more about those later, but essentially that is a gradual payment over time at different stages, defined stages of the build. So your builder will lay out a progress payment contract or a fixed price contract, and you pay basically as your house is built. So that's sort of I would say that's more the standard way of building. So the house and land package, which is generally a specific builder has purchased a section or the right to buy a section, they provide a total package. You settle on the land when the titles are due, and then you pay progress payments as time goes on. Generally, those are relatively fixed price as well. There are no massive changes really around like costs at the end of the build. They're still a fairly standard cost overall. The next one that we talk about and a lot of people like because it gives them a little bit more freedom around what to do with their build is the land and build. So essentially that's you've found a section and or a builder has maybe found it for you, and then you speak to a builder about building that home. And often the section and builder are disconnected in that you found the section and then you find the builder. So it does give you a little bit more freedom around just basically around the type of property you build or the type of build you do. And it tends to be the way that people are building when they're looking to maybe take a step up and do sort of a more architecturally designed type of build or that sort of design and build kind of feel. So that one is sort of the next step up. The last one I will talk about a little bit is the transportable or a kit set build kind of fits under this too. So firstly, a transportable, essentially that is when you've got some land and you want a builder to build a house in their yard and then transport it to your section. Traditionally, these builds have been quite a bit cheaper. So generally, people kind of gravitate towards them because they're sometimes $50,000 to $100,000 cheaper, and that's just down to the fact that the builder can save on travel costs and get everything to their yard where they've generally got the materials. So there's a lot of savings there for them. And then they can also do 2 or 3 of the same type of house at the same time. So we do a few of these. The key thing with transportables is essentially that you need to have enough equity in your section to pay for the majority of your house before it's sited. And sometimes this can be a bit of a chicken and egg situation because the bank generally won't lend money for a build until that build is on the section, until that house is connected to services. So things like water, power, stormwater, sewage, that kind of stuff. So at the moment, I've got a build like this where a customer is having their house built with a Waikato builder, and then in the Hawke's Bay is where their section is. They don't owe any money on their section, so they've bought that outright with cash, and then they've got some additional cash to carry the transportable build until it needs to be sited. So generally, a transportable needs quite a bit more equity and or some kind of temporary funding to get the house to the section until the bank's in a position to effectively lend the money against it. The last one I just wanted to cover off briefly, which we don't do a heap of, but sometimes people ask, is kit sets. So most builders will provide a kit set for you, and then you can then effectively contract a builder to build that home for you on site. The key thing with a kit set, very similar to a transportable, is that you need to be able to cover the cost of the kit set before you need to get the money from the bank. So again, it requires quite a bit of equity, generally borrowing against a section or potentially sourcing funding outside of bank funding initially with the knowledge that you can actually replace that funding once the house is built. Once you're starting to get progress payments coming through on your build, because generally you'd still have a builder's contract with that kit set. They're just not providing the materials. You could then start to draw down funds based on how much of the home is built. So for a bit more detail on that, you can get in touch with us. As I said, there are not a heap of them around because a lot of builders prefer to source the materials themselves because of the, it's a little bit easier for them. But yeah, we do the odd one. And yeah, that's effectively how the banks look at them. So let's talk a little bit about the build process. So from your perspective as a client or as a borrower, what we generally do is essentially when you first come to us, whether it's buying a first home, upgrading from an existing property, buying a rental property, or maybe buying and building a rental, we'd look firstly at budget setting. So, hey, how much can you afford to borrow and how does that fit into the bank's build policy? There is a little bit of a difference between sort of standard policy and bank build policy. But generally speaking, it's relatively similar. They just have to factor in some serviceability around cost overruns and things like that. So generally that's about 5 to 10%, depending on the bank. And yeah, it's just with this environment that we've got at the moment with rising costs, the bank just wants to know you can get that house built for the price that you think you can. And they want to cover off the fact that if that doesn't happen for a reason outside your control, that you can then essentially still meet the cost of getting that build finished. So budget setting is the first thing. Then we crack into a pre-approval. That's the same as any standard property. We would get the bank to commit to lending you that money. And in this space with build policy, there are a few, I suppose, tips and tricks that I'll just quickly mention that can make it a little bit easier to build. So the first one is it's a little bit easier to build with a lower deposit, especially if you've got a fixed price contract, house and land package or house and land build type deal. The reason for that is that the banks are exempt from the LVR restrictions for builds. So again, it's a push towards getting more construction underway and getting more houses built. So that's a directive from the Reserve Bank, and it just means that even though funding is quite limited over 80%, so with a lower deposit on standard properties, with builds it's not the same story. So there is a bit more space there to lend a bit more. The second thing is building rental properties. So if you live in your own home and you're looking to, say, buy or build your first rental, it's generally 40% deposit. If you're building, the banks will accept a 20% deposit for a rental property. So you can stay in your own home and you can borrow 80% of that value or up to 80% of that value. And often that can be enough to provide a 20% deposit for you to build a rental property. And I'm doing several of these at the moment in the Waikato as we've got equity growing for people that have had properties for a couple of years. Excuse me. I don't have COVID. Yeah, properties for a couple of years. And so that's becoming a really good option for a lot of clients. Yeah, the third thing just to kind of bear in mind is the serviceability thing. So some of the banks have imposed what we call debt to income ratios. So that means that the amount of debt cannot exceed 5, 6, 7 times your income. So you can talk to us. There's a few more of the specifics around that. And it's not just builds, but it is kind of happening a lot with builds because obviously the costs are rising a little bit there. So once we've got your pre-approval, you're then moving into things like quotes, build pricing, valuations, consents. So to have, once you've got your land, and it depends a little bit on the structure of your build, but once you've got your land price and your build price confirmed, or the overall price, and you've had that pre-approved, the next step is essentially to either find the land or confirm that overall cost and sign up the land for purchase, and then to work with your builder to get that pricing nailed down. So a couple of things that we're sort of looking at, actually I will cover those a bit later. I have got a few tips and tricks, so I'll go through that at that stage. So essentially getting your fixed price contract from your builder, your consent, your specs, so that's the house drawing and how it's going to look once it's built, your plans, your builder's risk insurance, which just is covering you while the build is taking place, and after which time your home or house and general house insurance will take over, and just essentially making sure that all those pieces kind of knit together. We also at this stage get what we call a registered valuation. So that is a evaluation of the land and the build, ideally at the same time. And that just basically confirms for the bank that the property you're building is going to be worth what you're paying for it. Then from there, we've got all of those things together, and that's when we accept the loan. So one just little thing to note around this build funding is that the time that you accept the loan for the build is when you start to get that cheaper blueprint to build, back my build floating rate. So at the start, if you buy the section first, that floating rate's not available until you've met your build conditions. So the things like the plans and the consent. So that can be a little bit of a grey area, I suppose, for some people, because they might settle on their sections earlier than the build is ready to start. Just we've had a few delays, etc., with pricing and drawing. Excuse me. So at that stage, we're looking to accept the loan. So that's exactly how we would normally do it with any other property. Confirm it with the bank. There will be loan documents to go to your solicitor. If you've already purchased the section, you won't need to go to your solicitor. But if you're doing it all at once, that's the solicitor. You need to sign those documents with your solicitor. So then from there, the bank starts drawing down progress payments. So depending a little bit on your situation will depend on when that process starts. So lots of people will maybe put their deposit into their section. Some people will borrow 80% of the section and retain some funds to start their build. And it just depends a lot on your situation, how much you're willing to pay to borrow the money up front for the section, for example, and or if it's a second or third property and you've got a property to sell. So just that can be a little bit different just depending on how it works for you. But essentially at that point, the progress payments start coming in, so the invoices from the builder, and we then arrange with the bank to get those paid. Every bank does that a little bit differently. So some will pay the builder directly, others will put the funds in your account for you to meet the invoice payment. So yeah, just depends a little bit on the bank there. So things I just wanted to kind of alert you to, just things to watch for when you're building in 2022. Obviously, still massively possible. We're doing a lot of these, and contrary to public opinion, not everyone is having to wait 12 months to build. Probably one of the big things that we are seeing is titles on sections are being a little bit delayed, and therefore builders are sort of starting to now struggle to hold building prices. So increases in build pricing, I think, is probably the single biggest thing to watch over the next 6 to 12 months as our costs maybe rise for those materials coming into New Zealand. And also I think there's a bit of a shortage of labour in the building sector as well. So those builders are obviously having to potentially get contractors in, and that pushes up their costs. So the sooner essentially you can lock in your build price, sign your build contract, the better. But obviously you need to balance that with some risk as well. The other thing that we are sort of just warning people about, and it's not something to be frightened about because generally we can always find a solution for every situation, but there could be changes in lending rules, lending products and serviceability in the next 12, 24 months. And if you've got a build that's delayed or that is planned for 12 or 24 months time, just thinking of checking in. I've got a couple of clients that are checking in every sort of 6 months or so, just checking in on bank policy, because a lot of those policy changes are not made public. So if you're concerned, just check in with us. We really don't mind an email every now and then to just say, hey, has anything changed for us? If you are going to have any changes in your situation, also really important to let us know. So a big one is if you're changing jobs, if you're starting a family, if anything is going to change from the original loan that we had approved, you need to let us know with plenty of notice, and that's really important. If you're losing income particularly, or don't want to say losing, but if that income's decreasing, then yeah, really important to just make a bit of a plan around that. One other thing that can catch some people is the registered master builder or certified builder requirement from some banks. So as a real general statement, I suppose, most banks are pretty comfortable lending to people who are building with the bigger builders, the GJ Gardners, the Classics, Generation Homes, those big ones that are, really well established, have a good reputation in the market generally, and have really good buying power. And I suppose like that longevity, that guarantee that, they're in a good financial position. And I think as we have some costs coming up and those builders starting to have to absorb those costs, the banks are probably going to want to see a few more builds going through those larger scale companies. So the registered master builder or certified builder, they are a guarantee. They're generally 10 years to guarantee the work that they do and the materials. The banks like to see that, obviously for the reason of high quality workmanship, but also just to kind of confirm that they are sound financially. They're not going to sort of disappear after building half your house. And that's sort of the main thing that the banks kind of get at when they're lending to you. So we have had a couple of situations with smaller builders who don't have those same guarantees, and some banks need basically something to stand in its place. So there is also a guarantee called a halo guarantee, and most banks will accept that as long as it's presented correctly. So if you are speaking to a builder who is not RMB or certified, then just have a bit of a chat to us about how that affects you. External quotes. Everybody's looking to save money on their build at the moment, which is totally fair enough, but it is something that we need to deal with early. And we do need to get quotes that are going to be adhered to. So obviously that is a little bit tough in the market at the moment with prices moving quickly. But if you are going to get external quotes, things like plumbing, drainage, often earthworks, those things, particularly if you've got good contacts, we do need to know about it early, and we need to quote it early with the rest of your build contract. So we can't just say, oh, yep, cool, it's going to cost you 20 grand to do this. It needs to be quoted, and the bank needs to see that and approve it. So it's just something to be aware of, and also just to make sure that you're covering off. Obviously, that's not really a factor when you're doing a fixed price or a turnkey build, but if you are designing with your builder, then often people say, oh, can I use so-and-so for plumbing, or so-and-so for electrical or flooring or whatnot. So yeah, that's definitely something just to kind of take, just to bear in mind. So overall, I don't want to keep everybody too long, but today just wanted to give a little bit of a start off of, things to look for with builds, to kind of help you understand that, yes, there is a little bit more maybe to get together these days, but we're absolutely still doing plenty of lending in that build space. And we do have really good contacts as well. So if you aren't sure, if you want to build and you aren't sure who to build with, or if you are a little bit concerned in any of these policy changes, just reach out to us. We will touch base with most of you via email anyway, just to say, hey, what's your situation? How can we help? And yeah, really it's just about education and making sure you're aware of how things work. So hopefully that was really helpful. I do have a bit of space for questions, and I do apologize that we don't have our PowerPoint up, but hopefully I have covered off most of the things I was going to cover off. So Greg has a couple of questions by the looks of it.
Yep. So first question, do I have to pay principal and interest while I'm building?
Oh, good question. Generally not. Yeah, you can if you want, but most banks will offer you interest only for up to 12 months, sometimes 24 months. So yep, that's a really good question. And obviously while you're maintaining a rent payment, often it can be a bit more pricey. So yep, absolutely.
What about valuations during the build? When do they potentially need to be done? And is it different depending on the type of build you do?
Yes. So valuations are always required of the land and the build at the point I described earlier, which is sort of at that meeting condition stage. So when we've got your plans and your specifications, or we know what you're building, always evaluation then, always evaluation at the end, which is the completion certificate from the valuer. That's not a full registered valuation. So that's kind of like a, yep, cool, I said it was going to be this, and it is, so happy days. That's the sort of standard valuation requirement. If you are a bit out of the box, if if we're doing a transportable, or if we're doing a build, a fixed price, a owner managed type build where maybe your company's building it, etc. Then there are often valuations required, maybe once or twice throughout the build, and they're generally smaller ones. They're a bit cheaper, so expecting, oh gosh, maybe I'm a little bit out of the loop, but probably about $1,500 for a build valuation. But the end ones are maybe $200 to $300, so it's not the same cost generally as you're not doing a full one each time. One thing I have been asked, and this relates to valuations as well in the past, is if I buy a townhouse, can I realise the equity, particularly if I've got a lower deposit? So if I go back to that example I had earlier of the $750,000 purchase with the $75K deposit, but actually by the time you settle, that house is worth $825. Can you realise that equity and effectively get your low equity margin removed? The answer is sometimes, depending on the bank, and always it needs a full new valuation. So if the difference to you is going to be enough, and we'll work that out for you, then it's worth getting a valuation. Sometimes it's better to just wait 3 to 6 months, and the bank will look at valuing it at that stage. So yeah, talk to us in that situation, because it has been happening a lot lately. Cool.
2 last questions. You mentioned
loving all these questions.
You mentioned stage payments.
Yep.
What do you mean by that? Like, what kind of stages? At what stages are normally payments?
What are normal? Yep. So generally, you have like an earthworks floor down type of invoice. So once your concrete slab is poured, then you'll have a frames up and roof on. Sometimes these are split if it's a really big build. And then closed in. So that's your cladding being on and basically watertight. From there, it's fitting out, so you're jib, painting, plastering, and then you generally a final one from there. So it's between 5 to maybe 7 or 8. If it's a really large build, sometimes, like if it's over $1 million for the build, then there might be a couple more payments in there because of the timing of things. But if it's a relatively standard $500,000 to $700,000 build, you'd probably expect around 5 to 7 progress payments.
And last one, variations during the build. So during the build, choosing to add something new that wasn't in the original contract. How do we manage that?
Yeah, cool. So variations invariably come up. One of the biggest thing is when you get your original loan approval, that's what the bank's agreed to lend you. Depending a little bit on your builder and how much your variations are, the best way to approach it, once you've drawn down your initial build loan, so let's say, for example, that's $500,000, the bank generally will need you to draw that full amount down, so pay for everything before they top you up. So they will generally, depending on your situation, top up at the end of the build. So if you do incur some variations, let's say that's $10,000, at the end of the build, there'll be a final payment, and we would look to top up to fund those variations. If at all possible, just get them included in the contract. So variations, ideally, you make those decisions while you're finalising your pricing. But yes, they do happen, and the way they are funded by the bank is generally at the end. In some cases, you might pay for them up front and top up at the end. Just talk to us about that before you sign on the dotted line, basically, because some builders as well will overcompensate for certain costs. So, for example, earthworks or engineering, they might have a certain amount that then becomes less, and so you can kind of offset a few. But it really is quite dependent on each situation. But that's generally how they deal with it. You good?
Good.
Cool. Thank you so much, team, for joining us tonight. Yeah, obviously, anytime, feel free to reach out to myself or Greg. We just clearupmymortgage.co.nz or greg@mymortgage.co.nz. Both of us really experienced, done a bunch of builds, really happy to help. And yeah, hopefully you found this really helpful. Do apologise about the technological difficulties, but one of us will be in touch with all of you tomorrow just to check in, see how we can help. But yeah, really appreciate you joining us. Have a wonderful Thursday night, and we'll look forward to seeing you soon.